Today we are going to talk about process costing. So process costing is a brief idea of interdepartment transfer. We do sell internal or external. We are talking about the internal sale from one department to another department. Just like Tata Motors is selling some components to Tata Chemical. Tata Chemical is selling some components to Tata Motors in that way. So we will discuss a small topic in process costing, that is normal loss, abnormal loss, abnormal gain. So how to deal with these things? See, the normal loss, we called it as an expected loss. Whenever you buy anything, you expect certain portion of the goods will be lost on transit. When it will come, you will lose certain amount or certain quantity on that process. So I have given an example. I am buying some fruits of 200 kgs from Barabazar and it will be transported to Goria. On the way, I am expecting 10% of the goods will be lost. That means 200 kgs of 10% is 20 kgs will be lost in transit. And that can be realized, or rather that can be sold in open market at a cheaper rate of 10 kgs, 10 rupees per kg, but actual cost is 50 rupees per kg. As it is a defective goods, I cannot sell it at the original value, so that is scrap value or realized value. After coming to Goria, I will check whether I have got 180 kg or not. After checking all the boxes, it may happen 175 kgs of goods is being, or fruits is being intact. Means I have expected 180, but actually I have got how much? 175. It means 5 kgs has been lost more. Extra loss. In that extra loss, we can say it is an abnormal loss. Or it can happen what? In case of 180 kg, I have received 185 kgs. Means I have lost less whatever I have expected. In that case, it is an abnormal gain because less than normal loss. Normal loss, how much it should be? 20, but here it is happening 15 because 200 kg minus 15 is 185 kg. So I have expected more, but in reality loss has happened less. So it is an abnormal gain. I hope this summarize activities or abnormal loss, abnormal gain or normal loss is clear. Now how to calculate abnormal loss or abnormal gain? Formula is total cost. Total cost means overhead cost. OC means overhead cost. MC means manufacturing cost. LC means labor cost. If you add all these things, you will get total cost minus realized value of your scrap goods, that is normal loss. Here scrap, how much we are doing? 10 rupees per kg. So 20 kgs of 10 is 200, and I am assuming there is a total cost of 20,000 divided by total unit. Total unit initially I have, how many I have purchased? 200 kgs. That we can say it is an input. Whatever the material I have purchased, that is input. And normal loss is how much? 20. So obviously it will be how much? 180 kg. And on the top, after deducting realized value 19,800, if we divide, we will get cost per unit. It means how much I am bearing the cost per kg of this raw material. If there is an abnormal loss, 5 kgs into per unit cost is 110, it will be 550 rupees. If it is an abnormal gain, it will be 5 into 110, 550. But as you know, in final accounts we have also done that whenever there is an abnormal loss, it is being deducted from purchase. How can you deduct? You can individually go and deduct from purchase, or you can write in the opposite side of the purchase. Purchase comes in trading account debit side, we will put on the credit side, it will be automatically deducted. So here abnormal loss will be put in the process costing in credit side, whereas if it is an abnormal gain, obviously it will be put on the debit side. So I hope basic structure of how to calculate abnormal loss, gain, and what is the meaning of normal loss, abnormal loss and abnormal gain, I am hopeful that you understand this topic. Still then, Tata.